Hi friends, welcome to my channel. Today I'm going to share my knowledge on how to get a perfect credit score. Generally speaking, a credit score of greater than 800 is considered as a perfect credit score. To give you some context, the maximum credit score that you can achieve is 850. You must be thinking, what is a credit score and why do I need a perfect credit score? A credit score is nothing but a score out of 850 that tells creditors and lenders about your financial habits. The simple answer to the question why you need a good credit score is you can save tons of money. Whenever you go to borrow money in the form of auto loans, mortgages, credit cards, the money that they lend you is not free of cost. There is an interest rate associated with it. You might have heard of the term APR, that is, you pay a specific cost to borrow money, and this extra cost is how these companies and lenders make money. If they see you as a safe customer, that is, you've paid your bills on time in the past, then they are happy to borrow you money at a lower interest rate, thus saving you tons of money. And that's why you need to have a perfect credit score. A point of note before we can proceed is the tips that I'm going to share with you today will help your credit score and boost it in a span of 3 to 6 months. So definitely be consistent and follow these tips and tricks diligently. With that, let's get started. Tip number 1. The most important aspect that affects your credit score is on-time payment. It has about 35% weightage towards your credit score, and it is extremely crucial to pay your monthly bills on time. What I mean by this is when you go to apply for a new loan, a mortgage, an auto loan or a credit card, there is a monthly bill that shows up at your door. This monthly bill consists of the principal, the interest and a due date. Definitely pay your bills on time, on or before the due date. If you don't, then this dings your credit score and it stays on your credit file for 7 years. What this means is when you go to get new credit, creditors will be able to see that you haven't paid some of the bills on time and will either reject or decline your credit application or will charge you extremely high interest rates, and thus you lose money in the long run. Now let's take an example. If you had a single credit card and you kept it for 16 months and you missed one payment, then your on-time payments are 59 out of 60. This comes down to about 98% on-time payments, which is medium risky for creditors. Let's take another example. If you had two credit cards and you kept it for 60 months and missed only one payment, then you have 119 on-time payments out of 120 payments, and this comes to about 99.1% on-time payments, and that's a green, which means creditors are happy and willing to lend you money at lowest possible interest rates. So the key learning here is pay your bills on time, and one trick or tip to have lower impact on your credit score is to definitely pay the minimum balance that you see on your bill that arrives every month. Let's move on to the second factor that contributes to 30% of your credit score, and this is called utilization rate. Utilization rate is nothing but the money you have utilized or used from the available pool of money that the creditors have credited you. This is a very important factor, and my recommendation is to keep your utilization to about 5 to 10% or below. Let's take an example on how utilization is calculated. Let's assume you have a single credit card and the credit line is $100. Say this month you bought around $5 of items and you got a $5 bill at the end of the month. This means that your utilization is 5%. On the other hand, say you went out with friends and there was a big bill of say $80 for a specific month. That means your utilization is 80%. This is pretty bad and it will definitely ding your credit score. A simple way to reduce your utilization is to have multiple credit cards with higher limits. So for example, if you had two credit cards, each of a credit limit of $100, then when you spend $5 in a month, your utilization is 2.5%. And if you spent $80 in a specific month, then your utilization is 40%. Now imagine you had 10 credit cards, each having a credit limit of $100, and you spent the same $80. In that case, your utilization will be 8%, which is in the ballpark of safety, and creditors will be happy to give you more money at lower interest rates, and your credit score will definitely improve drastically. The third contributing factor is average age of your credit. This specific metric contributes to about 15% of your credit score, and in general, creditors or lenders like to see a person having good financial habits and a long-standing good good credit history so that they feel confident to give or lend you money. Generally speaking, the average age between 1 to 5 years is considered as low, between 5 and 10 is considered as medium, and anything above 10 years is considered as excellent credit age. So let's take an example now. If you have a single credit card and you kept it for 4 years, your average credit age is 4 years. And now let's assume that after the 4th year, you applied for another credit card, you got approved, your average credit age immediately falls to 2 years. And therefore, my recommendation to maintain a good average credit age is to apply for credit cards in bulk. Say you decided to apply for a specific credit card today, apply for 2 to 3 credit cards within the span of 6 months so that your credit age for each of these accounts grows together. And therefore, when you go to apply for a new card, say several years later, your average credit age will not get hit or dinged that much, and your credit score will still be above 800. The fourth metric that contributes to the credit score is the different types of credits you have. This contributes around 10% towards your credit score. The various ways in which we as consumers can borrow money are credit cards, auto loans, mortgages, etc. Generally, lenders want to see variety of credits on your account. This gives them a lot of confidence that you are financially in good standing and have maintained good financial habits to pay different kinds of credits. And therefore, I recommend having a few credit cards, auto loans, and definitely if you're willing and can afford a house, go for a mortgage loan as well. The fifth and the final contributing factor to your credit score is number of hard inquiries. This contributes around 10% towards your credit score. Hard inquiries less than 3 is considered safe and good. Anything between 4 and 7 is considered as yellow or medium risk, and anything above 7 is considered as red or high risk. Creditors or lenders usually approve or want to give money to folks who have a perfect credit score, and before you go to borrow more money, make sure that you have less than 3 hard inquiries at that time. Also, another note, when you apply for a new credit card, an auto loan or a mortgage, lenders definitely will do a hard pull, and this will add to your hard inquiry list. Now I want to talk about how to identify the reasons for a low credit score. The first one is high utilization rate. As I mentioned earlier, if you have a utilization of more than 5 to 10%, that will ding your credit score, and it constitutes about 30% to your credit score. The second one is late payments. If you miss to pay your mortgage or your auto loan or your monthly statement on your credit card, then you will be dinged and your credit score will decrease. The third reason is not enough credit. This means that you have recently got your SSN and you're new in the journey of building credit, and it's totally fine to be in this position. The fourth reason for having a low credit score is bankruptcy and foreclosures. This basically means that you have declared bankruptcy, you don't have money to pay your mortgage, and this will stay in your credit report for 7 to 10 years. The final reason for a low credit score is collections. In this case, you had an outstanding bill of a moderate amount, say $100, $200, or even $1,000. This usually happens when you fail to pay a medical bill for more than 180 days. What happens is the institution sells or writes off this bill, and this will stay in your credit report for around 7 to 10 years. And now we move on to the final section. How do I improve my credit score? Once you have identified the reasons for your low credit score, the next step is to fix it. The first tip on how you can improve your credit score is by keeping your utilization extremely low. As I mentioned earlier, a utilization rate of 5 to 10% is generally considered safe, and you will see an immediate rise in your credit score as this contributes to about 30% of your credit score. Another way to improve your credit score is to use Experian Boost. If you have not heard about Experian Boost, this is a great free feature offered by Experian where it adds your monthly utility bills, internet bills, and phone bills to your credit report, and if you pay them on time, it improves and enhances your credit score pretty fast. And therefore, I recommend signing up for this free feature. You will find the link in the description box below. The next tip is to make on-time payments. As I mentioned earlier, late payments ding your credit score pretty hard, and they tend to stay in your credit report for around 7 to 10 years. And this is pretty bad. The reason is whenever you go to borrow more money, say you want to buy a house or an auto loan, They may reject your application just because you have some bad or late payments. And therefore, my first recommendation here is to pay your bills on time. A tip that I have personally used is I pay all of my credit cards one day before the statement balance kicks in, which means my credit score will improve not only because I pay all of my bills on time, but also I'm keeping a low utilization. Another tip I want to share today is never close your credit accounts. Generally speaking, you will pay off your car in the form of auto loans within 5 years and you will pay off your mortgage in 30 years. That said, your credit cards are the main ones that tend to get closed. I personally have closed several of my unused no annual fee credit cards and my credit score definitely dipped because of this. No annual fee credit cards are keeper cards. You can keep them in your drawer and pull them back once every 6 months or 12 months and use them just so that the credit card does not get closed automatically. And the major advantages of not closing your credit cards are you definitely will have a higher average credit age. The second reason is you will have more money or credit to play around with your utilization. Generally speaking, more credit cards means more credit limit, and as I mentioned in the earlier section of my video, if you have 10 credit cards each having a credit limit of $100, then your total credit limit is $1,000, and if you spend $80 a month, your utilization is 8%, which is in the safe ballpark. Now if you close 9 out of those 10 cards, then your utilization in the same case is going to be 80%, which is very bad. The final reason for why your credit score might be low is you don't have enough credit. When you identify that the reason for your low credit score is because you don't have enough credit, it likely means that you have never borrowed money or you have just applied for an SSN that was approved. In this case, I recommend you partner up with your parents, your sibling, or a friend who has extensive credit. Once they add you as an authorized user, you get a credit card and that credit account will start showing up in your credit report. This means anything positive or negative with that account will affect your credit score. Therefore, the trick is to partner up with a person that has good financial habits and a record of paying their bills on time. And those are the ways in which you can rectify and improve your credit score. I hope you found value in today's video, and if you genuinely liked the content, please hit the like button. If you want to learn more about good financial habits, how to improve your credit score, about technology, and how to be productive with your time, please consider subscribing to this channel. It doesn't cost you anything but helps with the YouTube algorithm and helps us build a community of like-minded people, which is my ultimate goal. Thank you so much. Take care.